Good morning. Here's your Indian underscore economy update wrap. Quick heads up, this is an AI-generated summary based on multiple sources. Please verify key info independently. Also, none of this is financial advice or a buy-sell recommendation. Alright, let's get into the latest. First off, the markets are reopening after a two-day weekend. And, of course, there's some interesting news that's been influencing the scene. Starting with GDP, India's recently released data shows a healthy growth rate of 7.4%, which actually beat expectations. That's a good sign, indicating some resilience in the economy and likely giving the markets a positive nudge. But geopolitics isn't taking a backseat. US President Trump announced plans to double steel tariffs from 25% to 50%. Yeah, that's quite a jump. The goal? To curb China's steel dumping and protect the US steel industry. Now, this move has raised concerns globally. India is actually considering increasing its anti-dumping duties on steel as a response. In fact, India's steel sector might see protective measures like doubling safeguard duties from 12% to 24%. Still, most analysts believe that the overall impact on the metal sector will be limited in the short term. Instead, the immediate focus is shifting towards the auto industry. Speaking of autos, Tata Motors reported a 9% decline in sales last month, selling around 70,187 vehicles. But there's a silver lining: electric vehicle sales are seeing a positive jump, which is encouraging. Meanwhile, Maruti Suzuki is planning to launch affordable cars within 2 to 3 years to counteract the slowdown caused by reduced car sales and rising inflation. Their focus is on budget-friendly models to stay competitive. On the travel front, Indian airline Indigo is expanding internationally. They're launching direct flights to 10 new cities, including London and Athens, aiming to boost their global footprint. In infrastructure news, L&T secured a favorable court ruling that allows a retendering process for a major Mumbai metro project valued at about 14,000 crores. This is a significant win for the company, giving it room to engage in the project again. Investors are keeping an eye on the NSE IPO. Discussions are ongoing, and it's a key event to watch in the coming days. In the corporate world, Ashok Leyland bagged a large order of 250 trucks from Patanjali, which should give their revenue a good boost. Vodafone Idea, meanwhile, has received approval for a 20,000 crore fundraise, though the financial challenges they face, like high debt and ongoing losses, still loom large. Next, a few words on the defense sector. Companies like Cochin Shipyard and GRSE are on the radar, thanks to government focus on renewable energy and upcoming naval orders. Indian defense contractors stand to benefit from large upcoming orders for ships and missiles, with 3 major public sector companies likely to secure significant contracts. And there's plenty of market chatter around the Adani Group. They're actively raising funds, though market speculation and rumors are swirling around their activities. On the regulatory front, with Hindenburg's reports no longer shaking markets since the founder has retired, the focus remains on their upcoming fundraising plans. LIC is also exploring an entry into health insurance. The plan? To acquire an existing health insurer within the next 2 to 3 months, expanding beyond their traditional life insurance business. Now, a quick look at some key stock news. The week ahead is packed with potential triggers, and it's worth paying attention to upcoming key numbers and data releases. Switching gears now, let's talk about Ola Electric, a major player in the EV space. Once holding over 50% market share, Ola's dominance has slipped dramatically to below 20%, mainly because of rising competition from players like TVS Motor and Bajaj Auto. In recent data, Ola's market share has been shrinking steadily, a sign of how fierce the EV race is getting. Financially, Ola Electric is facing serious challenges. Their revenue has plummeted from around 1600 crore to just 600 crore in recent quarters, and they're posting net losses of roughly 870 crore. Expenses are high compared to revenues, and the company's financial reserves are negative. Shareholding patterns reveal that over 57% of shares are held by the public, with promoters holding steady but also pledging about 6.5%, indicating some financial stress. Past controversies, including disputes on Twitter and customer complaints about after-sales services, haven't helped their brand image either. The company is raising funds through non-convertible debentures, around 1700 crore, to support working capital. But with rising debt and flagging revenues, market analysts like Kotak Securities have downgraded the stock's target price by nearly 45%, warning that further declines are on the cards. Even auditors have expressed going concern doubts, signaling that Ola is in a pretty tough spot, like a test match where the team is under pressure and fighting to stay in the game. Overall, the outlook remains cautious, with increasing debt, decreasing market share, and serious questions about financial sustainability. Now, shifting gaze to global geopolitical moves, US Senator Richard Blumenthal has proposed a bill to levy up to 500% tariffs on countries trading oil with Russia, specifically targeting India and China, which buy over 70% of Russian oil. The idea? To punish countries supporting Russia amidst ongoing sanctions and the Ukraine conflict. Russia's economy remains resilient thanks to its heavy dependence on oil exports, which account for about 10% of global oil production. India and China continue to enjoy heavy discounts on Russian oil, helping Russia fund its military efforts despite Western sanctions. The US is looking to deter India and China from further trade with Russia by proposing these hefty tariffs, which could push oil prices higher, making imports less affordable. This tension is part of a broader strategy, pressuring India and China through tariffs, much like past US negotiations, aiming to curb Russia's oil revenue globally. Upcoming trade negotiations between India and the US in early June will likely reveal how India plans to respond. This geopolitical game introduces considerable market uncertainty. Higher tariffs and ongoing tensions could lead to increased volatility, affecting investor confidence both at home and abroad. Let's also touch briefly on promoter share pledging. It's a key risk factor. When promoters pledge more than 50% of their shares, it raises the stakes for investors. Companies like Hindustan Zinc or Vedant, with pledges near 100%, are particularly vulnerable. Heavy pledging indicates financial stress, potential margin calls, and increased risk of share sales in downturns. I've got a list of 10 companies with promoter pledging over 50%, each with a market cap above 10,000 crore rupees, including names like Eurokafka, AR Housing Finance, Navama Wealth, and Hindustan Zinc. These are valuable lessons in risk assessment, so if you are investing, it's wise to study these situations carefully. Looking ahead, the coming week will be heavily shaped by some key events. No holidays are scheduled in June or early July, so markets will be active all 5 days. Recent trends show a roughly 1.15% decline over the last 5 sessions, mainly driven by bearish sentiment. Global cues, US markets were pretty much flat, adding about 50 points, while international energy markets are watching the OPEC Plus meeting, where a decision to increase output by 4 lakh barrels per day over the next 3 months could influence crude prices. Oil is currently above $60, sensitive to supply decisions. Back in India, macroeconomic indicators are quite revealing. The Q1 GDP growth of 7.4% surpassed expectations, but the overall FY25 growth is the slowest in 4 years, at 6.5%. Agricultural and manufacturing sectors are powering some of this growth, but the fiscal deficit has crossed 100% of initial estimates, something to keep an eye on. Foreign portfolio investors have sprinkled in about 20,000 crore rupees in May, signaling some renewed confidence amid continued market volatility. Tata's airline Indigo is expanding its fleet with 30 Airbus A350s, eyeing long-haul markets, including routes from Mumbai to Manchester. Meanwhile, Tata Motors sales dipped 9% last month, especially in electric vehicles, where their share has fallen from 70% to 53%. Competition is fierce now, with Ola Electric, Bajaj, and TVS stepping up their game. And don't miss this, Adani Ports plans to raise around $1 billion via senior unsecured notes, just after raising 5,000 crore rupees through LIC bonds. Healthcare giant Apollo Hospitals reported a 54% jump in net profit, and logistics firm NYK saw revenue leap 193%. Finally, some market humor: the trending Trump taco trade, where investors buy stocks whenever Trump announces tariffs, fearing he might backtrack later. It's a playful reminder of how unpredictable politics can be affecting markets. To wrap up, this week's market movement will hinge on geopolitical developments, US trade policies, and key economic indicators. Keep an eye on 9th July, when the US Supreme Court might decide on Trump's tariffs, major potential ripple effects there. That's all for today's update. Thanks for tuning in, and stay informed out there.